Hello friends, welcome to our new accounting video. In this video, we will learn how to record business transactions in the books of accounts. But first, we will revise the rules of debit and credit. In our previous video, we have learned that the rule to record personal accounts is debit the receiver and credit the giver. And the rule to record real account is debit what comes in, credit what goes out. And the rule to record nominal account is debit all expenses and losses, credit all incomes and gains. And now, we will see how to record business transactions in journal. Let's take some business transactions. Our first transactions is started business by investing cash, $10,000. Now, let's see what entry we will pass for this transaction. The entry for this transaction is cash account debit and capital account credit with $10,000. Here, cash account is debited, as we know that cash is a real account, and the rule of real account says debit what comes in, and due to this transaction, cash is coming in the business, therefore, cash account is debited. And now, we know that owner is the giver of money to the business, therefore, his personal account is credited, as the rule of personal account says, credit the giver. But here, capital account is credited to represent owner's personal account. Now, let's see our next transaction. Our next transaction is purchased goods for cash, $2,000. And the entry for this transaction is purchase account, debit, and cash account, credit with $2,000. Here, purchase account is representing goods, and it is debited, as due to this transaction, goods are coming in the business, and we know that goods are real account, and rule says debit what comes in, therefore, purchase account is debited, and we know that in this transaction, cash is going out from the business, therefore, cash account is credited, as cash is a real account, and rule says credit what goes out. Now, next transaction is sold goods for cash, $1,000. And the entry for this transaction is cash account debit and sales account credit with $1,000. We know that due to this transaction, cash is coming in the business, and it is a real account, and rule says debit what comes in. Therefore, cash account is debited, and sales account, which is representing goods here, credited, because due to this transaction, goods are going out from the business, and goods are real account, and rule says credit what goes out. Now, our next transaction is paid salary to employees, $200. Now, the entry for this transaction is salary account, debit, and cash account, credit. Salary account, debited, as it is a nominal account, and rule says debit all expenses and losses. And cash account, credited, because it is a real account, and rule says credit what goes out. In this video, only this much. I hope you find this video interesting. We look forward to see you in our next video. Wish you all the best.